Hello, I'm Angie and this is UK Money Wisdom. Today I want to deal with the scary headlines that every UK pensioner will need a tax return in 2025 and that the state pension rise will push everyone into self-assessment. Let me tell you right now, that's not true. Most pensioners will not need a tax return, but some will, and the rules have changed in ways that could easily catch people out. Today, I'm going to show you exactly how to check, simply, calmly, and in under 5 minutes. Here's what we're covering today. How HMRC taxes pension income, when pensioners do need a tax return, the 7 triggers HMRC uses, the Personal Allowance freeze impact, and your 5-minute Do I Need a Tax Return check. By the end of this video, you'll know whether you personally need a return and how to avoid penalties or mistakes. First, let's dispel the big myth, which is that all pensioners must file a tax return. That's absolutely false. You might have heard, as the state pension goes up and the tax allowance stays frozen, every pensioner will be dragged into self-assessment. This is false. HMRC does not want millions of pensioners suddenly filing tax returns. For most people, tax on pensions is handled automatically. No forms, no filing, nothing for you to do. Self-assessment is only for specific situations, and that's exactly what we're going to cover. In this second section, we will understand the principles behind how HMRC actually collect your tax, which decide if you need a tax assessment return or not. Here's the part many people don't realise. The state pension itself isn't taxed when you receive it. Instead, HMRC adjusts the tax code on your private pension to collect the tax automatically. So, if your income is just state pensions, private or workplace pensions, a bit of savings interest, your tax is normally sorted automatically. You only need a tax return when the system can't collect all the right tax. So in this third section, let's get down to when you will need to file a tax return by understanding the 7 triggers. And here are the 7 reasons when HMRC will require a tax return from a pensioner. If none of these apply to you, you're safe. Trigger number 1, your total income is over £150,000. Rare for most pensioners, but that means automatic self-assessment. Trigger number 2, untaxed income, if you have untaxed income over £2,500. This includes things like renting out a room, property letting, online selling that counts as a business, foreign income, hobby income, untaxed dividends or interest. And if it's over £2,500, HMRC will want a tax return. Trigger number 3 is if you're self-employed, and that is even if it's a tiny amount. This includes crafts, tutoring, small online shops, all these count. Trigger number 4 is if you have savings interest over £10,000 before tax. With higher rates, more pensioners are brushing up against this quite unexpectedly. Trigger number 5, claiming certain tax reliefs. These include higher rate pension relief, property losses, self-employment losses, and complex reliefs HMRC can't calculate automatically. Do write in the comments if you need more information on these, and I'm happy to provide it. In trigger number 6, the scenario if HMRC specifically asks you, sometimes for corrections, checks, or mismatched data. If they write to you that you must file a tax return, then you must file a tax return. Trigger number 7 is if you have capital gains above £3,000. For example, if you've sold shares, a second home, investments, crypto above the allowance, then a tax return will be required. Now in section 4, we're going to look at why pensioners are panicking. The personal allowance has been frozen for years, £12,570 since 2021. The autumn budget has now extended this date to 2031. That's 10 years of this same tax allowance threshold, which will push more and more pensioners into paying tax. And because the state pension keeps rising, this means more pensioners will pay some tax. But that does not necessarily mean they need a tax return, because HMRC can deduct the tax automatically. Pensioners worry because of misleading headlines which confuse tax liability with self-assessment, but they are not the same thing. And if you want to know the difference between tax liability and self-assessment, I'm happy to let you have that, either as a short comment or as a future video. Just let me know in the comments. In section 5, this is how to carry out your own 5-minute check. And here's how any pensioner can check in under 5 minutes. Step 1. Log in to your personal tax account. Search, check your income tax on gov.uk. Step 2. Look at your tax code. HMRC should be taxing your private pension to cover the state pension. In step 3, list your income. If it's only pensions plus small savings, you don't need self-assessment. In step 4, check the 7 triggers. This is the key. Step 5, check savings interest. Banks tell HMRC automatically, but do keep your own totals too, as mistakes can happen. The reassuring news I can bring you today is that most pensioners will never need to file a tax return unless something unusual is going on. Even with the tax allowance freeze, HMRC's system is designed to handle pension income quietly in the background automatically. You're not expected to become a tax expert. You just need to know the triggers, and now you do. If this video made things a little clearer, please click like, subscribe and share with someone who might be panicking unnecessarily. It could help them. And tell me in the comments, do you think you'll need a tax return this year? I'll help you check. This is Angie, and this is UK Money Wisdom. Bye for now.